Hi, this is Lara at Forex Info USA, just adding my 2 cents worth with a DJIA Elliott wave analysis, and I've done this just after the close of trading in New York, dated Wednesday the 28th of April. Well, a few hours after New York's closed anyway. Starting this analysis with a weekly chart that I've updated since the last time I did this on the 18th. And I'm looking at the end to primary wave 1 and a possible end to primary wave 2, just at the 0.618 ratio for primary 1, just above 11,245. At the beginning of this, it would have been really reasonable to expect the second wave to rise up to the 0.618 Fibonacci ratio for wave 1. That would have been a most likely target at the early stages. Before I go into this analysis and what I've done, I'd like to point out that if I had been doing this way back when primary 2 had started, it would have been really easy, although quite premature considering the time taken, to call an end to primary 2 back here when we had an end to W. A trend channel drawn containing W black would have been confidently breached to the downside. We could have had some pretty good indication that primary 2 could have been over there and primary 3 could have been said to have been underway with this piece of downwards movement. However, I would have expected it's a really shallow correction for a second wave and quite brief for a wave degree at primary degree. Thereafter, however, once this piece of movement developed, we would have seen its double 3 combination, and it would have been really easy, again, a trend channel drawn from this low to this low labelled X crosses just about here, and with this piece of downwards movement for several days in a row, couple of weeks almost, it would have been very easy and very likely to have called an end to primary 2 at this high labelled Y black. That would have been a very, very easy call to make. Everything would have looked pretty much right. It would have looked like it was over there. And this piece of movement would have come as a bit of a surprise. So if I had been charting the Dow back here, I probably would have said primary 2 was over here just like everyone else did. However, it's another reason I would have done that would have been to expect a 333 combination, because those structures are so rare, would have been very unexpected. So it's really easy for me to come in at the end and call a high and get it fairly accurately and fairly close. It makes me look really good. But I would have probably made exactly the same mistakes as everyone else has if I'd been charting it all this time. So with that said, we probably do have an end to primary 2, if not here, at 11,254 points. If it's not over there, it's probably going to be over pretty soon. I really like this divergence between the high labelled Y black and Z black on price trending up and an Elliott wave oscillator. Fairly good trend to the downside. Doesn't say that an end is definitely here, it just says that this trend to the upside is expiring. Ratios between W, Y and Z, reasonable ratios. Z is 1,353 points long. It's 137 points short of 0.618, the length of W. W and Y are trying for equality and failing to reach it by 187 points. So taking you now to a daily chart where I'm going to have a slightly closer look at this primary wave 2. Here's W, X, Y and Z, that 333 combination, a really rare combination. Ratios between A, B and C within W. A is 119 points more than 0.618, the length of C. So they've got a reasonable Fibonacci relationship there, and B is a 31% correction. Within A, B and C, a minor degree for wave Y, black, intermediate Y. Wave A is 118 points more than 0.786, the length of C. Slightly odd Fibonacci relationship, but a Fibonacci relationship nonetheless. And wave B blue here, a 24% correction of A. What I really like about this though, there's relationships between A, B and C within Z black are really nice Fibonacci relationships. Wave A is just 14 points off, being 0.618 the length of C. And wave B was a really nice 48% correction of A. So good relationships between there may possibly add a little bit more confidence that primary 2 could very well have been over there. Again, towards the end of wave C blue at minor degree, price is trending up from A to C. On an Elliott wave oscillator, we see a pretty good trend to the downside. So fairly good divergence there, a little bit more information that this upside momentum is waning if it's not already over. Taking you now to a 2-hourly chart where I'm just going to look at this piece of movement from this black X with a blue ABC to this black X here with the blue ABC analogous to that last chart. Having a look at the relationships just within minor blue C, the relationships between pink 1, 3 and 5. There is no Fibonacci relationship that I can discern between pink 3, which is 479 points long, and either pink 1 or 5. Pink 1 and 5 trying for equality and only failing to reach it by about 15 points. Pink 1 421 points long and 5 406 points long. We may have seen a really nice, reasonably nice ending expanding diagonal in this fifth wave position to end minor C blue. This diagonal, I have just two problems with it. Wave 3 and wave 1 are actually perfectly equal in length. They both seem to be 210 points long. And the other problem I have is it's a little difficult to see 4 as a 3-wave structure and a lot easier to see it as a 5-wave structure. However, having said that, 1 is a really nice 3-wave structure. 2, again, a beautiful 3-wave structure. 3 can certainly be seen as a 3. And 5, no doubt about it, an exaggerated 3-wave structure here. 4 is longer than 2 and 5 is longer than 3, and 3 is equal to 1. So possibly an ending expanding diagonal to finish up this primary wave 2, which also does kind of fit the psychology of an ending wave, to end it with an expanding diagonal, seeing as those have some aspects of a correction and some aspects of an impulse. Thereafter, we've had a pretty good drop to the downside from the Dow, maybe indicating that it's over here. So just taking you back to the weekly, personally, I would want to see a breach of this lower trend line that I've drawn here on the weekly chart. I've drawn it really conservatively from the start of primary wave 2 to this outside low here for the second X. I would want to see price movement below the edge of this parallel trend channel drawn here before I finally did call an end to primary 2. If I was trading the Dow, that's what I would want to be seeing. So that's all from me with the Dow analysis, just adding my 2 cents worth to the confusing mix of very many wave counts out there. Final word though, I would expect as we got towards the end of primary 2, those frustrated bears would very likely be throwing in the towel and entering long positions. That would be a fully expected psychology for the end to that primary wave 2. I'd be looking out for that trend channel to be breached to the downside, and if it was me, I'd probably be staying out of it until we had some confirmation with that channel being breached. So that's all from me with the Dow analysis. Your comments and suggestions on my wave counts, if you like it or don't like it, totally welcome. Thank you very much for your patience. Have an awesome day, and I hope all your trades are profitable.